This is going to be a video over the 24th. So, looking at the day, overall we had a rally that kind of formed a leg, looked like a leg in a trading range, and it formed a triangle, and then we had an upside breakout. And if you looked at the daily chart, well, let me start with the monthly. So again, monthly chart, the odds were we were going to go and test the lows due to consecutive outside bars on the monthly chart. So outside up and followed by outside down with consecutive buy climaxes. And the odds were we were going to test below. So on the open, let me try to zoom in a little bit. There we go, that should work. So big gap down on the open. First thing you should expect is, and you're also at critical support. So the first piece one should expect is a test of the moving average. So on the first bar, 20% chance this is the low of the day in general. Maybe it's a little bit higher with the big gap down. However, most people are better off waiting for consecutive bull bars or something stronger before looking to buy. And one of the things I would highly suggest people do is it's very important to develop setups that you're looking for and to have a binary kind of decision tree thought process, such as, this is just, and I'm just kind of making a bunch of these for fun, but you can see right here, it's a website called Lucid Chart. I think it's like $7 a month, but it's easy to make flowcharts. I can do diagrams, and how a flowchart works is you can look on YouTube if you want to get real technical about them, but it's a process, and these diamonds are decisions you have to make. So I'm just kind of, for fun, blueprinting second entry shorts at the top of a trading range. So first thing I'm going to ask is it clearly in a trading range? And if it's not, go to the market cycle. Now, that seems very redundant, but the point with decision trees is you really want to focus on, and I certainly didn't come up with this idea, and if you go to Al's website, I'm going to mispronounce his name, but Ali Afshari, who made a recent article on there. He's created quite a few articles, and one talked about flowcharts, and I really like his idea about training your subconscious mind. So what that really means is ingraining in yourself simple decisions. So like Al, he talks about the market cycle, and in the market cycle, I gotta zoom out a little bit. The first thing Al asks himself is it a trend or a trading range? And if it's a trading range, these are just little reminders. 80% of breakouts fail. Most setups are around 50-50. But I'm going to go to the very next question, which is tight or broad. If it's tight, wait for the breakout. And is there a breakout? No, so you wait for the breakout. And then when you get the breakout, you go to A. And A is how to trade a breakout. Breakout, is there follow through? No. Is it within a trading range? Yes. And maybe wait for a stronger. And again, I just started doing this a couple days ago, so I'm not more or less just playing with the idea. But the whole point is figure out a couple setups that you really like in each market cycle and blueprint how to do them. That way you start reminding yourself of ruling out bad choices. There's a lot of decisions you have to make when looking at the market, especially real time. So it's important to rule out decisions. So big bull bar. And the first thing I need to figure out is, are we in a trend or a trading range? At this point, I expect a trading range up to the moving average. Consecutive bull bars, probably always in long. Therefore, always in long means that the reason Al does that is it gives him a binary choice. Okay, if it's always in long, I should look to buy for a swing. So you either buy above, put your stop below, and maybe you hold for a couple legs up. Bear bar, And this bear bar is probably not strong enough to reverse this. It's probably a 50% pullback. Therefore, probably buyers below. Stop down here. And now we're getting an upside breakout. Bad follow through. Bull bar. Big bear bar. So why not argue this is you can call it a ledge, or it's not a ledge, but a truncated wedge. 3 pushes up, 1, pull back 2, pull back 3, where the third push doesn't go above. You can argue that, but again, it's a tight bull channel. You don't want to sell at around 50% pullbacks. This is probably a 50% pullback of this rally, and we pulled back here. 3 consecutive bull bars breaking out above a wedge, maybe 1, 2, 3. But we're really close to the moving average, so this could be, if this is a leg up in a trading range, we could form a top, sell off, and go sideways and sell off. So back to my flow chart of if I'm looking at trading ranges and I'm looking for second entries, well, one of the first questions in a trading range is, if I think this is a leg in a trading range, when we get to resistance, such as the moving average, I want to look to sell. But I don't want to sell right after strength. Therefore, I want to sell a second leg down. Just like a bull breakout, I expect the first reversal to fail, but maybe not the second in a trading range. So we get a big bear bar. However, after 3 consecutive bull bars, this is probably going to fail and go sideways. So good entry bar, but here, bad. So a lot of bears, if they sold, they'd be quick to get out above this bull bar. And this didn't trigger, so then they'd move it down to here, and it's 2 legs down. So you effectively had a wedge, 1, 2, 3, 2 legs down. And now the fight is going to be, do we get an upside breakout? Do we get a downside breakout? Look right now. This does not look like a strong trend. It looks like a leg in a trading range. Gaps are closing. This is closing. This is closing. And I really want to, on these videos, really harp on this. One problem I think with trading in general is there's a lot of information to digest. And with Al in the videos, there's a lot of stuff to study. There's many, he's got 4 books at this point. You got the video course. There's a lot to learn. And the one thing I like that Ali Afshari, and I apologize for mispronouncing his name, the one thing I really liked that he said was develop simple flow charts or decision trees for what you're trying to do. Because it takes years to get to where you can process everything and always remember trading range gaps close, or what am I trying to look for here? If I think it's a trading range, I want to buy at the top, I want to sell at the top, buy at the bottom. So here's a second entry short. It's failed breakout above a wedge, failed breakout above the moving average, but it's a weak signal bar, okay? Maybe I want a stronger entry bar. So what about here, strong entry bar? So if you think this is a leg in a trading range, maybe you sell below it. However, one of the problems is it's a 50% pullback of this tight trading range. So it's possible we rallied, we're going sideways, and we may get trend resumption up or trend reversal down. Didn't trigger. And now you're starting to get a tight channel. So you have to be questioning, the bears haven't made money on a stop entry for 8 or 9 bars. That's a problem. Now we have another big bear bar, but again, same issue as I just said. Bears are not making money. So while I think it's okay to sell, or I think it's okay to sell out to get out of the longs, I don't know how interested I would be in shorting. And same problem, possible small pullback, bull trend. Bear bar and no follow through to the downside. Big bear bar, reverse. Few bear bars, bull bar, bear bar, bull bar. Couple bear bars, a rally, couple bear bars. And are we going to get more down? Probably not. And a few legs down. But what do you notice? We're not getting consecutive bear bars. And, at this point, we're in a trading range. 3 pushes down, one pullback, 2 pullback, 3, or you can just call it 2 legs. This channel is pretty tight, so we may have to get a smaller second leg down, which we did. And now we have another bull bar. So you can argue wedge, 1, 2, 3. Another bear bar, bull bar. Traders will buy here. It's second entry buy at the bottom of a trading range. So traders buy, stop down there, and maybe they scalp out around the middle, or they hold for a swing and outside down. So maybe some got stopped out, and others may use a wide stop. And look what happened there. So I don't want to get too caught up in really in all the back and forth with the trading range, because the problem is the more it acts like a trading range, the more people start being flexible in what they're doing. So some buy, stop themselves out, or they buy and they put your stop down there so they didn't get stopped out. So all in all, develop setups for the market cycle. And as I was saying, we're clearly in a trading range. Bulls want trend reversal up, bears want trend resumption down. And, starting to go sideways, we're getting bad follow through. So breakout above this tight trading range, failed. Breaking out above this bar, follow through, possibly breaking out above here. But the bodies are getting weaker. And then we turn down. So now we have wedge, 1, 2, 3. It's a double top. The bears want a measured move down, test back to the open. But the bears are failing. And the bulls, this is looking good for the bulls. We're getting buying pressure here and here. 3 bull bars, 2 bull bars, breaking above this high. Can they close above this high? And then can they close above this high? The next question is, can they get another bull bar that's this size? You have to look at this. Big bear bars, second leg down. Bull bar, second leg up. Bull bars, second leg up. So this could be a second leg trap. And maybe we get a bear bar closing on its low. And we did. So now it's 3 pushes up. 1, 2, 3. Double top here. Do traders sell below? They could certainly sell below. It's a double top, lower high major trend reversal, and 40% chance it leads to a measured move down, and many times your risk. And quickly went outside up. So surprise breakout, closed strongly above all these bars. And again, it could be a failed breakout of these highs. It could be a higher high major trend reversal. So you have to wonder, just like all these breakout bars here, bad follow through here, bad follow through, are we going to get strong follow through? Are the bulls going to get another big bull bar? And disappointing. So a lot of bulls will get out below this bar and wait and see what the bears can do. And good entry bar, but not so great for the bears here. Outside down, but now we get a bull bar. A lot of bears would exit above this bar, and bulls may start buying again. Traders will see it as a breakout pullback and very strong rally. So odds are you're going to get a second leg up and pretty much just rally into the close. So one of the things I would say, and just kind of another sidebar, is when you're looking at a chart and thinking through what both sides are doing, it should be fairly kind of boring. In other words, there shouldn't be a lot of excitement. I mean, it's fun to look and say, are the bulls going to get their breakout here? Are they going to get follow through? Are they going to get bad, a big bear bar? But you have to be as unemotional as possible and you don't care either way. It's kind of, you have to almost, the reason why I like the flow chart idea, because it trains yourself to act more like a computer. And, you have 2 choices. You go left or you go right. So big bull bar, do I buy or do I not buy? And if I'm long, bear bar, get out. So I hope that helps as far as always in, maybe and I know I've said I'll try and structure these videos more and more down the road, and I'll figure out how I'll try to work on that, maybe do always in the beginning of the video, and then talk more about other pieces afterwards. But, overall, it's a trading range. And for always in, bulls buy above this bar, get out below here. They buy, put their stop down here. And, maybe they get out below here. Otherwise, they get out here. Tight channel. So if they don't get out here, they probably get out below this bear bar, the lower high. And, at this point, it's probably a trading range. So some bulls will buy, but it's becoming more of a limit order market. So if you buy, I don't know, maybe you get out below this bear bar. I don't think it's not a good market to swing trade in here. Some bears, they sell here, but if they did, they get stopped out above this bar. If you're quick, maybe you buy on the way up, but I don't know. It's an outside up bar, big risk. So a lot of traders probably would wait for follow through. And if bulls are long, they get out below this bar. Aggressive bears can sell below it. Bears get out, bulls probably get in here. Otherwise, maybe they get in here, or they wait for the breakout or the follow through and get in. 3 pushes up, so starting from a wedge. May start to go sideways soon, far away from the moving average. So a lot of traders will probably look to just get out somewhere in here. Starting to form, we went almost outside up, and outside down. So kind of forming an expanding triangle. May get a bear breakout, test the moving average. We didn't get it. Another big bull bar. If I was still long, it's probably wise to just start taking profits up here. And second leg. So often it's an exhaustion bar. 50, 60% of the time, call it whatever you want. It's very common to get a strong second leg after a likely exhausted bar, and then you sell off, which we did into the close. For limit orders, again, it's always in long. It's trading range day, so what's the first obvious limit order? Probably buying this low, scaling in lower. Some traders will buy below this bar. I don't know if I would. Maybe buying this low. Buying this low. Again, traders. There will be traders who will buy this low even and scale in. So they're, maybe buying below here. They'll buy this low. So the problem with limit orders is they get really subjective. And so I don't want to get too detailed with that. I really want to focus on stop entries and always in. So what was the best stop entry of the day? That's probably a tough one. It's hard to stay long in here because you keep getting pullbacks, which increase the chances of going sideways. So, maybe here, but the signal bar's not that great. Maybe the breakout pullback by here. Just not really an easy day for stop entries. So I hope this video helps.